Jeremy had time today.
Man, do I have time today? Because this is a long episode, and this one will be maybe medium length. What do I have time for today?
The time. Okay, so we're back on your Instagram. You posted about the best index fund. Why don't you explain the chart that we're seeing, and then I'll read the comment.
Yeah, so very simply, a lot of people often ask me, what is the best index fund? I always say buy and hold index funds. A very obvious, normal, natural question to ask is which one's the best? And the answer is there really isn't a best index fund. That doesn't really make sense because index funds all kind of are designed to do the same thing. And so this is a chart of the 12 most popular U.S. index funds. They vary by, some are mutual funds, some are ETFs, some track the S&P 500, some track the total market, some track like 1,000 stocks, like something in between. Different providers, Fidelity, Schwab, Vanguard, BlackRock, State Street, as diverse a group of U.S. stock market index funds as I can really find, at least as relating to like a total-ish stock market index fund. And the chart basically lays them all on top of each other, saying, doesn't matter if you buy VTSAX or VOO or SPY or VTI or ITOT or IVV or FXAIX, all of these are going to perform about the same. Don't worry about picking the best one. Just pick one that works with your brokerage, that's low cost, and stick with it. And then this commenter said,
FNILX, or as I like to call it, FNILX, has zero expense ratio and as good as FXAIX, which is FXAIX.
Jen just tried to say FXAIX.
Exactly. How would you say that? You put a Z in there. There's no Z.
Yeah. Yeah, VT Sachs, you can kind of say ITOT, you can kind of say
Spy is real cute.
Spy, VOO, but these ones, man,
ITOT might be my favorite. ITOT.
Okay. ITOT, yeah.
The latest Apple project.
Get some ITOTs.
Yeah.
The latest Apple project. You should get some tater tots.
Yeah.
Delicious, by the way. I love me some ITOTs. Okay, so I feel like we need to find some more mean comments because everyone's really nice. And and this commenter is right. FXAIX, which is one of the ones I have on this list, has an expense ratio of 0.015% per year. Expense ratio means of all the money you put in, the fund withdraws to cover their own expenses and profit margins and everything, 0.015% per year, and then the rest of it continues to grow for next year. FNILX has a 0% expense ratio, and it actually was kind of a little bit groundbreaking because Fidelity released these 4 big index funds that had a 0% expense ratio, the first ones in the industry to do it. And there was kind of this like race to the bottom, and they said, let's just go all the way there until there's actually one that has a positive expense ratio where they pay you for putting their money in, which I think might technically be possible. I don't know. So what's the difference? As shown in the chart, these are going to perform nearly identically because they both have extraordinarily low expense ratios. I say anything under 0.2 is very, very low, and 0.015 is more than 10 times lower than the bar for low, so it's extraordinarily low. And of course, 0 is 0, but they're both close to 0. Mm-hmm. And so I did a little analysis. If you invest $500 a month for 50 years, this is people yell at me when I say 40 years. I'm going to go even longer to exaggerate the difference between these two, right? Do it for 50 years. You do it from 25 to 75, your entire adult life, essentially. And you're either paying a 0% or 0.015% fee. This makes a difference. It's based on a 10% total return. So if you get all 10% and don't pay any fee, after 50 years, you'll have $6,983,451. If you're paying the fee, you'll have $6,946,006. And so, Jen, what's the difference between those two numbers?
You
just heard me say it. What'd you say?
Was it like 50,000?
Actually, that's incredible. Good job. Yeah, it's like, I'm just looking. It's like, it's a little bit, it's like 37,000. But yeah, it's the fact that you got to the right digit is pretty incredible. But as a percent, it's only 0.5% difference. And so, and this is 50 years out, everything's perfect, yada, yada, yada. And 0.5% is like a slow day in the market swing. If the market goes up or down 1%, that's kind of like a little bit of a volatile day. 2% is like probably going to make news. 0.5% is just like a slow day. And so, paying this fee for 50 years and you're like one day in the market, it's nothing, right? So that's the dollar amount difference is virtually nothing. The difference to your life is exactly nothing. you're not going to know the difference in 50 years from now. It's like, yeah, would you like to have the extra $37,000 when you're 75? Sure. But so many other things are going on in your life. You've like bought and sold houses, you moved, you're taking some money out, you blah, blah, like it's not even a real $37,000, right? This is just like showing the math on the difference it makes, which is almost nothing. Okay. So here we go. So, this commenter saying you might as well go with the lower one. And my answer is like, should you? It's going to make almost no difference. All things perfectly equal. Sure, why not go with the lower one? If you can pay a little bit less, might as well. Even if it's pennies, why not? But Jen, I need you to get the Nuance cannon out. Do you have the Nuance ticker tape parade?
Well, the kicker is it's very quiet. That's why you guys haven't heard it, because it's the Nuance cannon.
Do you have the Nuance slide trombone? Do you have the Nuance hydrogen bomb? Because here comes all the Nuance. And before, anytime I bring out the Nuance cannon, what I say is, it doesn't matter. None of this matters. Just pick one, go with it. Does not matter. Like, turn off this podcast, go outside, touch grass, go outside. It doesn't matter. But if you're on a car ride and you want to hear the end of the show, I'll say it. Okay, here we go. I'm going to break down the difference between these two to see how similar they are. Holdings in FXAIX, we need like FXAIX is 508. Holdings in FNILX is 513. Technically, FXAIX tracks the S&P 500, and technically, FNILX tracks a proprietary list of large companies, which is almost the exact same companies down to like a small few at the bottom, right? And so their performance will be functionally identical. The expense ratio we already talked about, tiny difference, teeny tiny difference. Even zoomed in over 50 years makes almost a day's trades in the market, right? Net assets, that means how much money is in each of these. In FXAIX, the higher expense ratio one, they have $740 billion held in this fund currently because it's a lot older. In FNILX, it's $16 billion. So there's 46 times more money in FXAIX than there is in FNILX. Some smaller funds run the risk of being shut down. What a lot of companies do is they introduce like a whole slew of mutual funds. They see if any of them like get any traction. If some of them underperform and don't have any investors, they shut them down, and it can force you to realize any capital gains. So they just say, hey, this fund's going away. Here's a tax statement saying everything got sold, and we put you into this other one. FNILX still has $16 billion. I'd say it's relatively new compared to FXAIX. It's relatively small, but it's still pretty big and pretty old compared to a lot of mutual funds. I'd say the risk of it closing is around zero because Fidelity has kind of hung their hat on having this zero expense ratio mutual fund now. Distributions are when do you get the money paid out from all of the dividends collected inside the fund. So both of these funds own 500 stocks. In the big stocks, many of them, probably 300 or 400, so I'm guessing, I didn't look that one up, but most of them pay dividends. So for example, if you own AT&T, every month or every quarter or whenever, they're going to pay you some cash, deposit directly to your account just for owning the stock. That's called a dividend. The funds that own 500 stocks collect all those dividends, and then by law in the US, they're required to pay those dividends out to you at least once during the year. FXAIX pays them out quarterly, April, June, September, December. At the end of every quarter, they cut you a check for the collected dividends of all those stocks inside. FNILX, the 0% expense ratio fund, pays it out annually. The difference has nothing to do with the total growth. They'll have the exact same total growth, assuming you're reinvesting dividends. If you're not reinvesting dividends and you're holding the cash out, it might impact it a little bit because you're getting the cash sooner. But assuming you're reinvesting the dividends, you're keeping you're taking the cash and buying more shares of the same thing, the growth will be virtually identical because that's what's happening inside the fund. They're reinvesting it internally, and then the day they pay out the dividend, they sell, adjust the share price, and the dividend gets paid out to you. It might have some impact to your lifestyle if you are retired and you like getting a quarterly check rather than one big one in December just for your own personal cash flow reasons. That's a little bit of a difference. And then the final difference I'll mention is portability. And there's a lot of people are like, oh, you can't transfer FNILX. I really read it carefully. I couldn't find that. So what I did is actually went to my Vanguard account and I opened it up, clicked trade, clicked buy mutual funds. I typed in FXAIX, FXAIX, And it lets me trade it for free. It's one of these really popular mutual funds that, even though it's Vanguard, it lets me trade the Fidelity mutual fund for free. So no buy fee, no trade fee. It's not guaranteed for the future, but that's what it's doing today. And that means if I am unhappy with Fidelity for some reason, and I transfer my account from Fidelity to Vanguard, I can do an in-kind transfer. That means it takes the actual shares of FXAIX and moves them into my Vanguard account. That means I don't have to sell anything to move between accounts, which is a good thing because it's not going to force me to realize a capital gain if I don't want to. FNILX, the 0% expense ratio, Fidelity doesn't allow that. They don't allow it to go with any other. And I demonstrated that to myself because I went to try to buy it in Vanguard. It said, nope, not available, can't do it. That means if you are with Fidelity and you want to transfer your account to Vanguard for some reason, FNILX will have to be sold. You have to sell all the shares inside of Fidelity and then just wire the cash over to Vanguard. And does that matter? They're still in Nuance canon territory. Are you really going to be, transferring it? And it doesn't matter at all inside of an IRA, for example, because IRA, there's no tax impact. Maybe it matters a little bit because you have to deal with the hassle of selling it and rebuying it on the other side. But generally speaking, it doesn't matter at all. Inside of a brokerage account, a taxable brokerage account, you would have to sell your stock, sell your mutual fund, move it over, and then potentially realize a gain or a loss, a tax consequence. You may not want that. You're not a huge deal. This is all kind of like barely moves the needle kind of stuff, but they're all like all those things except for the expense ratio tilt towards FXAIX. More net assets, more often distributions, better portability, better tradability on other brokerage websites. So to this commenter saying, might as well go with the 0% one. Yeah, maybe, I think actually when I invested inside of the custodial accounts for my 2 kids, I chose these 0% expense ratio funds. I was like, yeah, might as well. I'm planning to be with Fidelity forever and don't really care about distributions because it's all getting reinvested. Go nuts. But it just doesn't matter. It's all Nuance canon. Just buy whatever. That's the whole point of this.
Nuance
Ooh, the
canon.
Nuance slide whistle. We have a whole Nuance band coming. We're gonna have a Nuance
I love
marching
it.
band.
We're getting real musical over here. Okay, so we're Team FXAIX. Long way to say all that.
Yeah, exactly. Social media. I like the podcast because I can go on a rant and you're forced to listen because you're in the car. And what else do you do? Listen to Choose FI. Good luck. You've already gone through all those episodes.
Jeremy.
Sorry. Did I speak over you? What were you saying?
You're fine. I just love that you think that they can't fast forward.
No, if they're already down to our podcast, they've listened to all the good podcasts. They're stuck with us.
I'd say if they're an hour in, they're probably going to just be like, you know what? I've made it here.
They're like, why is this episode an hour? Why did he say it's so important? And then they're going to realize they got to this point in the episode, like, oh, nothing. Although he did really yell at that one social media guy. So
this is the juicy stuff. This is a great episode, Jeremy.
Yeah, good.
Yes. We're at the end.
But the takeaway isn't FXAIX is better than FNILX. It's that it doesn't matter. Just
Nuance canon.
Bitcoin. Even if you transfer to sell, it's not that big of a deal. Like the big deal is putting more money in. That's put more money into either one. Doesn't matter.
If there's one thing about you is you're consistent.
Thank you, Jennifer. I'm like a sociopathic robot.
Not my government name on the podcast.
Full government. Are they gonna be able to look you up now? No one could have connected that. Why do they call her Jen? Is it short for Genevius?
Yo, the amount of people who are like, is it Jennifer? I'm like, yeah, most are.
I know, shockingly.
All right, cool. That was a great episode. Thank you, Jeremy, for dropping all of that knowledge. This is free.
Free, guys.
Crazy. Come back next week. We're going to do it again. Thank you for listening.
Subscribe to Jen's OnlyFans, though. That's how she's going to.
I was talking to an older woman this week, and she said fans only, and I lost it.
Andrea exclusively calls it fans only. One of my big regrets in life was not registering fansonly.com the day OnlyFans came to be, and putting like a drop shipping site for ceiling fans and just like all links to Amazon and just selling fans and just having. I think you could have a very lucrative business selling fans on fansonly.com.
The scamming continues.
Yeah.
Guys, come back next week. I'll try and rein Jeremy in. I'm sorry.
Oh my gosh. Never. It's going to get crazy from here.
Tell us the 2 rules.
All right. Thank you guys for joining. And remember the 2 rules of building wealth. Rule number 1, live below your means. And rule number 2, invest early and often.